Hey, it's Matt with PriceActionTradingSystem.com, and it is Tuesday. It's June 16th. This will be our chart lesson for the day, and I'm going to move through this pretty quickly today. I apologize, but I'm real short of time, and I still want to get this up. And there's a ton of trades here. Most of them were shorts up in the highs, and really this is a range day. I guess I should clarify that first. There's a couple of trends in here, but they don't really help you that much. The only thing that really might have helped you on these bigger trends, I should say, you really just needed to trade the range, understand that it's a range, and trade the short-term stuff within that range. The only thing that might have helped you was finding this equal distance, and even then it wasn't really that easy to find because originally I would have had it like that, and that's not equal distance. So it doesn't really help you to even find this down here. Really, what helps you find this down here is that red line. People ask me every day what that red line and those yellow lines are. The red line is the close from yesterday, and the yellow line is the open at 8:30. That's why it starts where the white line is right there. So if you know where those 2 points are, you know what the daily chart, you know there's a gap because we opened here and closed here yesterday. Well, you know on the daily chart there's no bar in there. So a lot of times prices will come back and fill that gap and look right where it went to. People ask me, well, how do you know prices were going there? Because I know that was the close from yesterday, and if they start heading that way, that's a likely target. I don't know for sure that's where they're going, but I know from experience that's probably where they're going. And that's how I pick those prices. And the other way is using the targets the way I teach you how to use them. So we didn't need this. This just really gets in the way. It's not helpful. There's not any. It might have helped right here. I'll leave that trend line on there just for that reason. But I'm going to take some of this other stuff off. This one doesn't really help you here. I'm going to take it off. Other than the overshoot, we had an overshoot which led to a reversal. But this is just a range day. And you can see where we were testing that on the other side coming back down. That was kind of holding as that former resistance trend line is now kind of acting as support from the upper side. And that's what support and resistance turns into support, and support reverses into resistance at times. So keep that in mind. But I'm going to back out here, and I'm going to go through these trades pretty quickly because I've only got about 15 minutes today. So I'm going to try to do it really quickly. 7 o'clock came right up through here, so we were already rallying strongly. And of course you can draw your trend line right off those first few bars there, and if you copy it up, drag it to the top, it's fitting nicely. And we come back and notice you got a new low, and you try to go short once, you try to go short again. You really tried to go short right there. It broke lower on this. Hey, let me make this bigger. This is still hard to see. You broke lower right there. So that was a failed second entry short, but I don't like going long way away from the EMA right into the upper trend channel line. But when we try to come down again, you really you made that low, you test it once, you test it twice. So really you got a double test there. I don't have a little line drawn. Let me just draw it. So you might look at that as a double test off the key entry point, the trend line, the support line. We're still a little ways from the EMA, so I just left it green. It's a little risky, but we're probably going to at least push up. And we did have a break here too. Notice this trend line coming up, but you can almost ignore that sometimes during the overnight because you'll get these breaks and the trend will keep going. In this case it didn't. We moved all the way up to a new high, but I would have played this trend out. And but you may take that one, and we move it up, we get an overshoot, we come back. If you got a second entry here, you might take it off this midline in here, but again, you're so far away from the EMA, and you've been away for almost an hour now, so I just don't see anything up through here I would risk. Again, you get a double test right here, and it broke lower and turned up, but you got to go long right at the high of the day, and we're still way away from the EMA. So I just don't think there's anything worth taking. And then we run up, we make a new high, and then we Notice we make that bar and we break higher and turn and go down all in one bar, and we're still away from the EMA. There's still plenty of room back. You may take that short because we've had this overshoot. Plus we've had a break of this one in a new high. So we're probably at least coming back to the EMA and maybe even all the way back to the trend line, and we may even reverse. So I like that one. And then we push on through the EMA, the midline, we pull back, and we get a failed second entry long right here. Notice first entry, second entry. So that's a trap. If it breaks lower right there, after breaking higher here, you can probably get a scalp out of that. And you got plenty of room back to the trend line. And that's exactly where it goes. And it just keeps on going. This little channel keeps on going. I'm going to say this real quickly. I'm really trying to get through this quickly, and I don't have a lot of time for other stuff. But I get at least 15 emails a day from people that saying, why did this trap fail? Why did this looks like a perfect trap. Why did this trap fail? Make sure you hear this. If you're not a seasoned, very good price action chart reader, forget about traps, because what a trap is a spot that fools people to entering in the wrong direction. And every time somebody sends me their chart, want to know why their trap didn't work, they're just getting trapped. You're not good enough of a chart reader to know a trap that's the whole idea, to fool you. So once you really, really get good at reading the chart and seeing these second entries, and it's all second nature, the traps will make perfect sense. And usually you only find the traps by avoiding bad entries with the trend. And then you'll get the trap in the other direction, and then it strengthens the with trend entry, and there's a good entry spot. But most of you cannot see that yet. You're not good enough, and you're just outsmarting yourself, and you're outthinking yourself, and you're just causing yourself to have more losers. So if you're not pretty close to being profitable or already profitable, forget about traps. This is for more advanced traders. You're just not ready for those because you can't see it. You're actually getting yourself trapped, thinking you're trapping people. You're trading traps, and you're just getting trapped. And that's the whole idea behind traps, is to fool you. It's to fool inexperienced traders into entering in the wrong direction. So that's all I'm going to say about that. But if you enter in a trap and you get trapped, don't even waste time sending me an email. I don't want to make people think I don't want to answer your emails, because that's not the reason. But I get 15 or 20 of those a day, and they're just a waste of time, because all it was you got yourself trapped. So just, don't trade them. You're not ready to trade them. Just like I tell people they're not ready to go live, and every day I get at least one email from somebody who says, yeah, I know you said not to go live. I didn't listen. Now I know better. Well, it's too late. You've already lost all your money. You blew your account. I get that every day, at least one. And I got a couple of them today. Don't trade live. You're not good enough. You're trading against seasoned professionals. And I'm getting off on a tangent. But anyway, failed second entry long, that's a long trap. Because now all the longs are over, and we're coming back to at least the trend line, and we may be reversing. So now's a good time to look for traps to this side, because we're trending higher. And if it breaks lower right here, we're probably headed down at least to the trend line, and you're probably going to trap longs right there. There's probably a bunch of you that went long right there. Just like yesterday, I skipped a bunch of trades that looked just like this, that worked. And I said, and people would say, why'd you skip that trade? There's a nice second entry there with a nice signal bar. I skipped it because it's an oddball place. It's not a key entry point. And this is what usually happens to you if you take them. So this is a great learning example of why all those 25 emails I got from yesterday about a trade just like that, why didn't I mark it when you saw it take off? Sure, it worked that one day, but it's not a good setup because it's a weird spot. It's not a key entry point. And the odds are, most of the time, it will do exactly what it did right here. It traps you and goes the other way. So that's why I didn't mark those trades for you guys that ask. All right, we're working on down, and there's too much congestion here. It's a nice key entry point, and we just really don't get another good setup to the short side. And it's a shame because you have to watch it keep going. But if you got in up here, you would have had a runner, and you could just ride this all the way down. The longer, one thing I want you to understand, the longer this trend continues here and stays away from that EMA, the bigger chance if you entering short, you're going to get trapped and stopped out. And that's what happened. People will watch it and watch it. They won't enter up here because they don't have enough faith in their read, and they watch it and watch it and watch it and say, okay, well I know it's going down now, so I'm going to enter, and they probably enter right here, and well, you wouldn't have probably got stopped out on that, but it scares them when it starts doing this and they exit, or else they enter somewhere right in here and they get stopped out, and then they watch it go on down, and then they finally say right down here, well I'm gonna enter again, and it turns down and they enter right here, and the next thing you know it's going sideways or the other direction. So you got to learn to spot the reversals early and get in early, because the longer this thing goes, and now that you got a break, any new low could lead to a reversal. So you don't want to enter down here. That's what will happen. People will enter down here. They don't even know there's a trend channel there. They just see prices going lower and they want to enter. You got to learn to read this chart. And then there's a first entry and a second entry. I didn't mark this one because we've already had a break and a new low, and you do have a little trend working up here. You're better off just to skip that one. If you took it, I'm not going to beat you up too bad on it because the bias is still down here, but you got to break it a new low, but you might get another leg down. What you do, it just takes a little longer, so you really still get 2 legs down here, but it just takes a little while. So you might take that one. If you had a really good signal bar there, which I don't, you may take that trade. We could argue for it to be green if you have a good signal bar. My signal bar is not that good. It's bearish, but one more tick higher and it closes in the middle and it's really neutral. But you come down first entry and you get a second entry here when you're looking for a reversal. So I like going long there. You got enough room to get out for getting back to the EMA, and it kind of works higher. There's a higher low right here, but by that time you can see this is just looking really range-like and congestive. Just stay out. And you actually come up here and you make a new high and a big bearish bar, but I'd wait on a lower high, which comes right here. So you might go short right there. There's just not enough evidence to know you're turning down here yet. You do have a break of this and a new high in place now, but it could push up. See how it tries to push up? It could have gone just a little higher and stopped you out. But now that you see the lower high, now you got a little more evidence. All this is a little more evidence that prices are starting to turn back down. This little correction's ending right here. And look at it go all the way down to a new low. And then you make a new low. Then you get a higher low right here. And that is a huge bullish bar. It's right into that EMA though. I marked it green. But the other thing, it's a failed break lower here. Really, this had kind of moved up. Oops. I'd call it right in there at that point. But later on, I moved it back down, and I'll leave it right there. That's where it tends to bounce the rest of the time. But this is still a little failed break out of all this congestion. This is just congestion here. And so this is a higher low. The only reason this isn't red is because it's right into the EMA. And it's a huge bar. You could turn up and come back down again. So wait for something better, and you just really never get another chance until this gets all the way back up to the high side, and then there's that high again, and then there's the lower high right there. That's the safer place to enter. And again, you could argue for that one to be green, but you'll get stopped out sometimes. That's the reason they're a little aggressive and they're green. And we end up reversing and going higher again here. And see, that could have happened right here. So that's why I like to wait on a lower high. And you don't get a good bar here. You get a little double top, but the bar's not bearish enough. And you just never really get an entry. And then it bounces down here at the low. That's another one that you could argue to be green, but you got a little trend line working down. There's not really a double test yet. You tested it here, and that looks a little like a test, but I'd want to see something a little closer in here. But again, you could argue for that to be green at a minimum, but I wouldn't take that trade. I'd wait on a higher low, which comes here. Now you're right back to the high, so I don't like going long there either. And you come up here and you make a high, but again, you don't get a very good signal bar until here when you get that failed second entry long. And it traps longs, trying to get long into this, and you probably would have moved this up to here by now. You can see how you're getting more resistance and more touches. And I try to get on the closes as much as you can, where we're still getting as many touches as you can. So, and now we're under the EMA and it comes back and it confirms that trend line. That's a great place to go short. Look at it go. Comes back here, not bearish enough, just a first entry. Same thing here. That one's bearish enough. It's a first entry. And we do have a little bit of room left on your measured move. I forgot to show you that. That came from the very first leg down, and then this is where we kind of started lower again. So, and you can see we got basically almost a perfect measured move, and you still got a little room there, so you might take that trade. I'll at least make it green. I just think you'd be better off to wait on the better trade. You know, there's better trades that'll come along, I guess is what I'm trying to say. It's not that that's a horrible trade. It's just not a perfect trade, and there'll be better ones that come along. So, but once you hit this measured move and you're that far away from the EMA, you might catch a major low here. So that one may be worth risking. Again, it's risky though. You're going to lose sometimes on those, so that's why it's green. You get a higher low here, but no setup, and then you get a second entry short, and that is the first break of that trend line, and that's a two-legged correction, so that's probably going to be the center of a pattern. So you can go short there. So I would measure this leg down and move this over here now. And you can see we found support. We could continue to go lower, but notice how it found support there, because most of the people that know how to find these measured moves are all exiting right there. Even if we're going to go lower, they'll usually exit at those measured moves. And you just really don't get another entry here. Again, where we probably headed, right down here to test this overnight, the close from yesterday. And I'll probably buy this one every time if you get a setup like this that far away from the EMA. It's still aggressive because sometimes it will go a little lower or keep going lower. Today it bounced. And if you catch that trade right there, you got an easy runner. And look at this thing just keep going up. They usually turn out to be important lows. It may not be, it may even be the low of the day. But that never checks up. And then you make a correction here, got a new low, and then a first entry, second entry. So there's a second entry short there, and your measured move looks like this. We're nowhere close to that, so you still got a lot of room to go. And so I like entering right there on that trap. And then this just gets too congested. There is a second entry long there, and you see it didn't go far. It still went far enough to work. It's another one. You could argue for it to be green. But let me show you, you've already got a break and a new high. And that could easily tick higher and turn down. It's not quite back to the EMA. It's kind of out there in limbo. But it is congestive and it's a little break lower too. So that gives you a reason to actually have some support below it without having to be back to the EMA, if that makes sense. If it doesn't, then read up on ranges. And then we break out, you try to go higher once, and then you get a second entry long with a nice bullish bar right there. That is congestion, but if you understand what's going on there, you can enter that one. You're better to wait on the higher low, which comes right here, and this actually breaks lower and turns up. Great place to go long. And they trap shorts right there. All these people trying to pick a top have to suddenly exit again. And of course you draw that trend line that's working up there, and we work back to it. No setup there. By the time you get this one, you're right back into the highs. Same thing here, but on a trap, a lot of times they'll create that little trap to give you a chance to get out, and that's kind of what that is right there. And you notice how it shoots up real fast. So you might enter there. I'd skip this. It's just too range-like, too congestive, and you don't have a whole lot of room to the highs. So I'd skip that one. I marked it. And same thing here. You just don't really get a good setup. You get a failed breakout here. You get a lower high here. Again, I didn't mark it because there's 3 bars there, and at least 2 of them don't have a body. But it's back in the range, and since you're playing a range, you don't have to worry about that EMA or that congestion right there as much. The reason you're getting it is because prices can't get back. They've gotten stuck between the EMA and the range tends to be holding. So that's another one you may enter right there. Um, I'll mark it green. I got to really rush here. And of course, now you get 2 legs back to the trend line, to the support. That's not a perfect bar, but on the second entry, right at the support with a double test, take that trade because you're just playing range rules. It's close enough. It closes in the upper 1/3. Off it goes. Again, signal bar is not good enough there, and now you're on that big downtrend line. You're looking for prices to maybe turn down there, but you really need to wait on this lower high, and it gives you a chance to get back in right at the eye of this range. It's working down. First entry, second entry, right off that key entry point, really right off the, you could have drawn that on across. Another great entry. First entry, second entry, there's 2 in a row. Now it bounces off this low trend line. You do get a higher low right here. Again, I didn't mark it because that's the first break of this one, and it's just it'd just be a first entry long, and you need to wait on a trap or something. And look what happens. It pushes higher, comes back, and you get the failed second entry short and another nice bar. Now's the time to go long. Runs up. You really don't get anything else going up in here. Now you're back up here at the highs. You get a lower high, still plenty of room back to the EMA. And see how it's holding right there? A lot of times it'll bounce and turn back up, and it tried, but it still worked. You just did have enough room to get out of that one. Actually, you ended up with a lot more room than you needed, but it's hard to hold on to a trade that's sitting there bouncing because it could turn, and notice how it's making a little higher high each time. That will shake people out. So that's why I tell you to put your stop where it goes and leave it alone. Let the trade decide for you if your read's right. And I just don't see anything else in this sideways stuff here that's worthwhile. There's a possible short here, but it's just so congestive. And you probably would have moved this down like so. But if you entered right there, I'd probably be okay with it, but you might have gotten stopped out right there because this ends up going higher. So if you did enter there, you got stopped out. And that's a good example of it trying to get through the EMA and turning up before it ever got down. So you might have entered there on that lower high on a range, but you'd be better off to wait on another, like a failure to the upside with all that congestion. And so, but by the time I saw that many stacked up and no bodies or real small bodies, I just skipped that. And of course, then you get a breakout to the bottom, and notice there's a high first entry. So you get a second entry back. Look how far away you are from the EMA. I marked it green because of the trend line. There's no break of it yet, and it is, again, you might want to wait on a higher low, but you don't get that here. It just ends up making you get 2 legs down, and then it reverses. And you don't get a chance, no signal bar here, nothing here, too congestive. Then you make that high. Now you make a lower high with a nice bearish bar way away from the EMA. And notice too that that's moving up. First entry, that's a second entry, and it's 2 legs up right here. So really, your true second entry, even though you don't get one on this chart, would be right here because that's your 2 legs up. And just remember, that's what second entries are all about, counting 2 legs. So you go short right there. That was a great move. Now you're bouncing off the lows again. First entry short, second entry short. If it breaks higher, actually it breaks higher above this bar, so that's where the trap was created. That's a failed second entry short, but we just came off the lows, so we bounced across here, so you're expecting prices to go higher. So when it breaks higher, but your safety stop still has to go down below that swing, even though you're using this bar for your entry, because that's where it failed. And you ride it back to the top. And again, there's a lower high. I didn't mark it. I probably should have marked that one. I'm okay with that one. You got plenty of room to get out on that one. Then you get a failed second entry long, but it's right into the EMA, and then you push through and get a little trap right there. Right off that trend line, big bearish bar. I like that one. You're not going to probably get many second entries in something like this. So if you get a good trend line like that and a good bearish bar and you got room to get out, and this one actually broke higher and turned down, so you'd go short right there. You could wait here as long as you got enough room left to get out before this low, which I think you do. And that pretty much took you into 2 o'clock. And I hate that I had to rush through those last trades. But you can see we were just in a range up here. We were in a tighter one, and then it just got bigger. And really we were in a ranging across here. We had a little trend here. But it's just a range day. It's a pretty big range, though. So you had plenty of trades in here. So anyway, I hate to wrap it up that quick on you, but I'm going to wrap this one up. We'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.